Kevin Green, senior markets correspondent, joining me now to help set up some of the other action and things that we're watching today. Fed is a big focus today, KG. I know the expectation is we're not expected to see movement on rates, but what should we be prepared for?
I'd say it's going to be the commentary coming from Chairman Powell. Obviously, kind of looking at their forecasting metrics and if they are able to try to put some numbers to work when it comes to the fiscal policy from the new administration. I think that's going to be a key area. I think something that also goes underlooked when Powell speaks, usually during the Q&A, is he'll actually mention the Fed's PCE expectations or their model. And so that'll actually give us some better clarity as to what they're looking for on Friday. But overall, once again, I think it's going to be about the fiscal policy. And I don't believe that he's going to be as dovish as Waller. I don't think he's going to be hawkish at all, but I don't think he's going to be as dovish as Waller. And I'm curious to see how the Treasury market or the yield market's actually going to react to that. I mean, last time we did see a pretty significant drop after his press conference here. I'm not sure if he's going to go 2 for 2 on a massive move to the downside. Usually that's not the case, and usually the market's up understands exactly where he's coming from here. But once again, I think it's just going to be around the fiscal policy. I think that'll be the big fireworks for today. And then also if President Trump has any type of commentary, negative or positive, when it comes to Chairman Powell and his delivery.
Yeah, it's so funny that you mentioned Waller, because I literally was going to ask you about that. I mean, I wasn't expecting him to be as dovish in terms of the presser, because, he tends to me, strike the balance and speaks a more measured way. One of the things I think that sometimes some people that we talked to have questions about was, if this is a pause, as we're expecting, is this a prudent pause? How do you think the market is reading it, KG?
Well, I think the market obviously really does want rate cuts, but at the end of the day, the data is not really supporting that. And so until the data actually does support that, either with inflation coming down and or the labor market actually cooling off, I think the Fed has to actually kind of stay where it's at right now. It's not the risk of cutting too early is that inflation remains sticky or reaccelerates to the upside. And then you have something that looks like the late 1970s, early 80s, right? X the oil embargo. So I think that's going to be the biggest risk. And I think the Fed actually does understand that. I think the market, once again, just wants to see rate cuts, and rightfully so. Cheaper capital kind of spurs economic growth. And so that's a spigot that the market really wants to see. But I don't think the Fed has the data right now. And, what's actually very interesting is that CPI print, everybody was kind of cheerleading it, but it was still very hot. It just was lower than the street's expectations, but it is showing a small reacceleration when you're looking at CPI. PCE might be a little bit different, but I think Powell also might comment on that and say, look, the trend in inflation is not going in the direction of the Fed. And if he kind of doubles down on that message, I think that's where it gets a little bit bearish in the market.
All right. And I know we've got some earnings to chew on today. We've got some coming after the close today. But before that, we got ASML. And that looked good, especially when you think about what we saw with regard to the hit that tech stocks took this week, especially in the semis. So what are some of the numbers that came out from ASML, KG?
Yeah, a very low bar when it came to the earnings for ASML, and then also maybe some of the commentary also provided a little bit of comfort for the stock here. But we did see actually net bookings grow 169% on a quarter-over-quarter basis. Now that completely knocked it out of the park when it came to the analyst expectations, and you are seeing both a beat on the top and bottom line. Now we did see an initial spike in the shares of around 11% before kind of pulling back. Now it's up around 5% here, but they did provide stronger than expected guidance when it comes to not only fiscal year 2025, but also Q1 2025. They did make mention that DeepSeek actually could be very bullish when it comes to demand for chips for them, and they believe that that's going to be a positive. On the other side of that, they did mention also, though, that China sales most likely, or the proportion of revenue coming from China most likely will decelerate over the next couple of quarters, just because of some of the issues that we are seeing with sanctions and things of that nature. So they're expecting a little bit more of a normalization. That might have been the only thing that was slightly negative for the company when it came to their conference call. But overall, it was a really good report. Once again, very low bar, trying to break out to the upside here today. Let's see if it's going to be able to hold its gains.
And then I want to hear some of your thoughts about some of the Mag 7 that we're going to hear from today. We've got Tesla, Microsoft, Meta. I know Meta recently revealed those plans of spending between 60 to 65 billion on AI infrastructure. What are you expecting to hear on the earnings front, KG?
Well, obviously, the conference call is going to probably take a little bit of a different turn because of the DeepSeek news, and I'm sure a lot of analysts are going to ask about it. I think it's too early to call when it comes to any type of adjustments for CapEx spend, especially for this year and maybe even for 2026. So I would kind of suspect that we might continue to hear an affirmation of what their current guidance is going to be, and then also maybe a tone that they may make adjustments if they do see fit. Make sure that they're deploying capital in the most efficient manner for the company. And I think that's exactly what we're going to hear. I don't think you're going to hear any type of adjustments, massive adjustments when it comes to CapEx spend, which is kind of what the market was pricing in to start off. And then also kind of looking at their current quarter and if they are seeing demand for the AI products that they have available right now. I think Microsoft's going to be a very big key component of that. Their Azure platform is expected to actually see a really nice, healthy gain when it comes to usage. And I believe the estimates right now sitting at around 31% on a year-over-year basis when it comes to growth for just the Azure product offering alone. And the market's expecting around a 12% increase, around a 12% increase because of the AI product offerings within the Azure suite to really drive that. So I don't expect any type of major fireworks to the downside when it comes to CapEx spend. I think it's going to be all about consumer demand and how they see their business moving forward.
Yeah, that makes sense. And I can't see them moving too much away from, I mean, this DeepSeek was surprising information, but I imagine they will have their feet held to the fire on the conference calls, the earnings calls. Kevin Green, Senior Markets Correspondent, thanks a ton for both the setup for today and what to expect after the close.